Hello and welcome. You're watching Your Trades. The markets have settled around 100 points below for Nifty. But as far as the broader markets are concerned, the bears were in complete control as we closed and advanced decline ratio completely even Steven with 1,336 stocks that were advancing and compared to 1,420 stocks which remains on declining mode. In terms of Nifty gainers, it was led by Tata Consumers, Tata Steel, all up around 2% and followed by Hindalco, Trent, Titan, Cipla gaining more than 0.5%. While on the losing side, it was Tech Mahindra that led as far as Nifty is concerned. After the Q1 numbers, the market did give a thumbs down and closed around 3% lower in the trade, followed by IndusInd Bank, Infosys, SBI Life, STL Tech and Eternal all down more than 1%. In terms of sectors, the gainers of yesterday's trade actually became losers today, and if you talk about PSU banks or defense, all were losing in trade today. In short, they were all down around 1%. Nifty IT was also leading with the losses today, down over 1% at the close. And also talk about Nifty Bank that also dragged the market. In terms of gainers, the real estate sector did do well today. Nifty Realty leading with 1% gains, and the stocks, the likes of DLF, were leading that rally. And in terms of stock specific actions, if you talk about Mahindra Logistics, that was leading in the trade today. But overall, a day on the losing side, Nifty closing around 100%, around 100 points lower, but more than that, the breadth of the market completely favored the bears today. But moving on, let's also take a look how the news fared today, what made the headlines. Apart from markets, SBI's QIP was in news, where SBI is eyeing a 25,000 crore QIP. Tech Mahindra was under pressure as we spoke, around 3% down after mixed Q1 numbers. Talking about ABB India, after the parent sees record intake, that stock remained in focus, and Mahindra Logistics, which jumped around 6% on rights issue details. Even Godrej Properties gained on land acquisition news, and HDFC AMC soared after strong Q1 earnings which were posted by the company. Glenmark bets big on India, and talking about innovation, EMS that was in focus, and more importantly, ET Now exclusive detailed how much IRDAI is bounding companies to hike in terms of rural allocation and obligation to boost the reach as far as these sectors are concerned. To discuss about market, how it is faring, what is the direction, and what can be the way forward, we have with us Nilesh Jain, Head Derivatives and Technical Research, Centrum Broking. Nilesh, welcome to ET Now. My first question to you: market seems to be in consolidation mode. On one day, it is ending on the gaining side, and the very second day on a losing side. When do you think this consolidation phase is going to end?
Very good afternoon to you. Absolutely. So we are witnessing a bit of consolidation in last couple of trading sessions. In fact, Nifty is stuck in a very tight range of 25,000 to 25,200 in last 4 consecutive sessions. The broader range also, if you see, we have multiple supports are in place starting with 25,000. Below that, we may see a fall towards 24,800, 24,500 as well. But as of now, this consolidation is a good sign that market is witnessing this kind of a consolidation that is giving a good opportunity to accumulate quality stocks. Once this consolidation gets over, we are expecting a move on the upside. A breakout about 25,200 is something that we are waiting for. If Nifty breaks about 25,200, that will give a short covering rally towards 25,500. As of now, support is at 50 DMA, which is placed at 25,000, and 21 DMA is placed at 25,200. So that's the narrow range for the Nifty from a very short-term perspective. Whichever side it will break, we can expect another 100 to 200 point move in that particular direction. Now, good part is that the volatility index in the weeks, which is very much in the comfort zone at 11, almost near 11, it is trading at multi-month lowest level. So till the time it doesn't crosses about 12.5, 13 on the upside, we are likely to witness and can expect a strong pullback in the market.
Invitation to join. Thank you so much for that update. But I also want to understand you in this market. Which are your stock specific picks, if you can detail?
Right. So couple of buy ideas from my side, as mentioned, that this is a market where ideally one should avoid looking at index, but focus should be on sectors and stock specific actions. In fact, AMC space as a whole is looking strong on the chart. Be it UTI AMC, NAM India, HDFC AMC. In fact, all these stocks are looking positive. Specifically, HDFC AMC today, this particular counter has given a good move at all-time high levels, so looks strong on the chart, and we are expecting a follow-up move to continue in HDFC AMC. So on the upside, we can expect a kind of a target of 5,700 to 5,750 on the upside, with a stop loss below 5405. 5405 should be the stop loss, and 5,750 will be the target on the upside for HDFC AMC. So it's a buy. Apart from that, oil and gas space, specifically MGL, is looking strong after a decline in last couple of trading session. Today we have seen a good reversal with the higher than average volume participation. So we can expect a follow-up move in Mahanagar Gas MGL to continue on the upside towards the levels of 1575. That's our short-term target, and stop loss can be placed at 1495.
All right, that's the advice which is coming in from Nilesh. Thank you so much for giving those picks. Moving on, we have Srishti ready to give the charts every day she researches and tell us which are the stocks to watch.
Well, yes, we have got two counters, one on the breakout side and the other one on the breakdown side. Firstly, quickly, let's have a look at the breakout stock for today, and that is Varun Beverages, because of late we have seen quite a fall in Varun Beverages, but for the past 4 days, the stock is actually moving higher. And on the charts, if you will see, the stock is now making a comeback after crossing that falling trend line breakout for itself. Is the fourth consecutive day of up move for Varun Beverages, which is now seen to be trading above its all key moving averages. So this is the first stock that we wish to highlight on the breakout side. Moving on to the next one, that's actually a breakdown stock, and that is Bharat Dynamics on the charts, because yes, of course, we have been tracking the kind of move in all these defense related counters, and Bharat Dynamics is left no behind. But of late, we have seen a double top formation on this particular stock. The stock has actually broken below its support level of 1800 and is now trading below its key moving averages as well. So hence, we have chosen this stock as one of the breakdown stocks. So these are the two stocks for today. Back to you.
Thanks, Srishti, for those details. Now moving on, Mahesh Patil, CIO, Aditya Birla Sun Life AMC sees mid-single digit earnings growth for the June quarter, with the momentum picking up from here on. He also expects to see a 10% earnings growth for FY26. Let's listen in.
This quarter also, I think, will not be that great. We are expecting around mid-single digit growth. But I think as we progress into the second half of this fiscal year, I think you will see the earnings momentum start to pick up, primarily because of not only the lower base, but also some of the sectors, which were kind of weak last year or before that. I think you will see a recovery over there. I mean, our expectation is that this fiscal year, you will see around 10% kind of earnings growth.
Tech Mahindra has posted earnings, and after that stock was under pressure even as margins expanded for the 7th straight quarter. But revenue and PAT did slip. CEO flagged BFSI and communication as growth drivers. My colleague Pulkit Bandi is joining in with more details.
Tech Mahindra has released its Q1 earning, and if we compare with TCS and HCL, the results are quite better. Revenue is around minus 0.2% down quarter-on-quarter basis. If we talk about EBIT, it is around 5.1% up quarter-on-quarter basis. If we talk about profit after tax, it is down around minus 2.2%. And if we talk about EBIT margin, it is up around 60 basis points. The revenue in USD term is also up around 1% quarter-on-quarter basis. If we talk about headcount, it stood at around 1,48,517. And for LTM attrition, it stood at 12.6%, higher than from last quarter, because last quarter it was around 11.8%. If we talk about the deal win, it stood at around $809 million. If we consider the scorecard, that is the ET now estimates. So as per the ET now estimates, revenue is in line, EBIT is above than expectation, EBIT margin, it is above than expectation, and for profit after tax, it is below. Now it will be great to see how the Tech Mahindra stock will perform.
The management also said the macro picture remains hazy but remains optimistic about IT business opportunities. Let's also listen into what Tech Mahindra's management guided for.
$50 million clients over the past year. Again, I think on the whole, and we've done this analysis obviously on an ongoing basis, our largest clients are growing much faster than the company average, and so we remain confident about our focus on our largest clients and our opportunities to grow them.
No, the only point I'll say that is quarterly, the macro is so uncertain that there's quarterly variation on different customers at different point of time. So I think we should look at it as more as annual trends, and this is a metric that we had committed to share in our annual report out, right, on our long-term plans.
All right, Wipro numbers are out and numbers are flashing on your screen. As we can see, the net profit has actually come in at 3,330 crore and versus ET Now poll of 3,233 crore. As far as the revenue is concerned, the revenue has come in at 22,527 crore was the last time, and this time it has come in at 22,135 crore. On the PAT front, as I told you, it's 6.7% down this time, 3,330 crore, and this I am talking about consolidated numbers. ET Now poll was guiding around 3,233 crore. To get more sense on numbers, we have with us an expert who will be joining in very soon. But not only Wipro, even Axis Bank numbers are out, and the PAT figure seems to be lesser than what ET Now poll was guiding, that is around 5,806 crore, while the poll said 6,370 crore. The GNPAs have actually come in at 1.57% versus 1.28% is the number which is coming now, and NI, as I see, 13,559 crore versus poll of 13,780 crore. Pre-provision operating profit is coming in at 11,515 crore, and the poll was also around the same numbers, 11,110 crore is what we were expecting. The gross NPA have stood at 1.57% versus 1.28%. So there is a sharp rise in gross NPAs and also net NPAs, which is coming at 0.45% versus 0.33%, which were there in the last quarter. So absolute gross NPA has also risen 17,765 crore versus 16,211 crore, that is up 9.6% QOQ. And we have with us Sandeep Agarwal, fund manager, Sovilo Investment Managers, to talk about Wipro earnings. Sandeep, hi. My first question to you, now this is the fourth IT earnings. So what is your first reaction on the numbers?
No, so revenue numbers are looking slightly better than what was expected, right? Everyone was expecting around 3% kind of quarter-on-quarter CC decline, 2.5 to 3%. I think against that the numbers are broadly flattish. It is down very less. We don't know actually the impact of the currency yet, but the dollar numbers are looking better. So I think from a revenue perspective, it is looking okay. And we have not been able to yet dissect the margin numbers, but we have to see that. But prima facie, the number which are flashing on the channel on the revenue front, they are looking decent. And the guidance range is -1 to +1 for Q2. That I think is little muted, but given the environment which is going on in the sector, I think this should also be more or less in expected lines.
So numbers on expected lines, if you can see on the first instance, but till now the IT companies have posted better margins, as far as if you talk about TCS, you talk about HCL Tech, as well as Tech Mahindra. What is the expectation and what kind of ground is there for the IT sector per se?
No, so the results have been mixed back till now. For example, TCS, while margins were okay, the revenue disappointment was bigger. Again, in case of HCL, it was exactly opposite. While revenues were broadly in line, but the margins were quite disappointing. So, right till and Tech Mahindra's case, everything was more or less in line. So, the three companies have given three different kind of results. In case of Wipro, there is a slightly better numbers on the revenue front, and also the guidance is more or less on expected line. So, I would say that, in fact, all the four numbers are slightly different and contradictory. But broadly, this sector is very matured right now, and I don't expect much growth for the large caps in the sector. And based on that growth numbers and pressure on margins, which can come naturally due to wage hikes, I think, the sector will have a muted kind of environment for some time to come.
All right, Sandeep, thank you so much for joining and sharing your views on Wipro as well as IT sector. We'll connect with you once again once we have more detailed numbers from Wipro. But for now, we also have Aditya Shah, founder Hercules Advisors, to talk about Axis Bank numbers. Just to remind you viewers, the PAT has come in at 5,806 crore, and more importantly, what I can see, there is a rise in GNPA and NNPA, if I can see the numbers right. Aditya, what is your view?
I'm looking at the numbers, but it seems that if there's a rise in the gross and the net NPA, then the results are not really good. We've seen system-wide NPAs have risen only in the microfinance industry, or other industries are able to control their NPAs. Need to see the 5 lines. It's been only 40 seconds, so it's not been able to see. Yes, the gross NPAs have risen from about 1.54% to about 1.57%, and year on year as well, they have risen. So I don't think particularly a positive set of numbers from Axis.
Aditya, just to give you a brief on numbers, what we have right now, gross NPA at 1.57% versus 1.28% QOQ, net NPA at 0.45% versus 0.33% QOQ. Talking about provisions, that is at 3,948 crore versus 2,039 crore. So 93% rise in provisions as well YOY. But absolute gross NPAs, and where I need your attention, 17,765 crore versus 16,211 crore. This I am talking QOQ, which is up 9.6%. So clearly there is a rise in bad loans.
Absolutely, there's a rise in bad loans, there's a rise in provisions, and the loan growth and deposit growth is not extraordinarily out of what is there for the system. So in my opinion, not a particularly healthy set of numbers, very disappointing numbers from Axis.
How do you read NII numbers as well? If I can read out the numbers for you, that is 13,559 crore, and this is up 0.8% YOY. So hardly there is any growth if you talk about NII if you compare with last year. All right, we'll connect with Adit once again, and there will be more clarifications, there will be more commentary on Axis Bank as well as Wipro, because both the earnings call are lined up in just an hour or so. So we'll get back with more details on both the earnings. But for now, ABB Global reports a robust order intake in the second quarter with free cash flow of over $840 million, but flags concerns for its India business with order inflow down 9%. My colleague Kanishka is joining in with more details.
Well, ABB India is in focus today after the global parent posted its Q2 numbers today. Now, globally, ABB has reported a record high order intake that is up 14% on a year-on-year basis, with revenue that's gone up 6%, whereas the operational EBITDA that has risen 9% to $1.7 billion. This was driven by strong momentum in electrification and process automation segments. Now, if we take a look at how the rest of the sectors performed, now electrification, as I said, was the top performer. EBITDA crossed $1 billion for the first time. Process automation got a boost from a $600 million marine order. On the other hand, there's motion segment which remained largely flat, whereas the robotic segment that lagged amid tariff concerns. Now, if we take a look at how the India business performed for ABB, India order inflow that fell about 9% on a year-on-year basis. This is likely due to inventory adjustments and macro caution, despite strength in motion and robotics in other AMEA markets we have seen. In fact, despite this performance, a downtick that we have seen in the order intake for India, ABB India shares, they have recovered from the lowest point of the day, probably implying that the street was penciling in an even weaker performance, but it's been better than expectation. Now, looking at the outlook, ABB, that's the global parent, has given a guidance that it's expecting mid-single digit revenue growth in FY25 and steady margins alongside, while it's also keeping a close eye on the uncertain global backdrop and tariff headwinds.
All right, Kanishka, thank you so much for those details. With this, it's time to say goodbye in this edition of Your Trades, but keep watching ET Now.